Their worst fears just came true. Hey, everybody, you're watching Bull Boom, Bear Bust, back with another dose of economic reality. BX4, Bull to the Bus. Let's go ahead and get right into it, folks. A lot to talk about. We are days away from the moment of truth, and I'll be glad to get this whole November 5th situation in the rear view mirror, right? We've got both sides out there saying that the other side is going to cause destruction of the country, economic collapse, if you will. So we'll see what happens. Either way, we're going to be ready for it. We're going to be on top of it. Please make sure you are subscribed. A lot of big, important news and updates and data to get into today about the economy. So far, the rate cut that we saw back in September, we can look now and see that it really didn't do much. Car sales, disappointed. Long-term rates still rising. I'm going to talk about all that and more here in just a little bit. First of all, gold hanging tough above 2,700. Silver hanging tough above $33. And it's going to continue, folks. De-dollarization is the news on this is spreading. We got the BRICS meeting in place right now. We're going to see what comes out of that, what announcements are made, what new countries have joined. It's many, many countries. We're going to talk about that here in a little bit. Let's go ahead and start right here, though. Out of auto finance news. Auto sales unchanged following first Fed rate cut. Yes, folks, the rate cut did nothing as the debt is already so high and vehicle prices are still too high for people. So the rate cut fizzled when it comes to the car market and the used vehicle market. Let's get into some data here on that, on the vehicle sales. Starting off here with the Manheim Used Vehicle Index. And we have the report out now for September. And what do we see? Let me go ahead and zoom in here. This was the summer bounce, folks. And this was what is the result. This is the result from the rate cut. Does that look like much to you? That looks like a dead cat bounce on the way down. Look at this. We did see this dead cat bounce in the summer of 2022. Minor bounce in 23, minor bounce this year. Folks, it's going down. They can't find enough buyers. Prices are still too high. People are too broke. People just don't have the money, folks. And yes, the billionaires are still buying stocks. That hasn't changed. The billionaires can still keep the market propped up, even if 90% of the population is completely wiped out. Why? Because the billionaires own about 90% of all stocks, folks, the top 10%. So it's pretty sad that people actually look at the stock market thinking that that's a sign of the overall economy. Now, there may be some people making money that are not in the top 10%. People's 401ks going up with the stock market if they're in stocks. Many people actually moved to money markets because you're getting a little bit of a return now. You can get a 4 or 5% return now on money market funds. So many people like the stability and the predictability of that return. But let's take a look here, though, at some other information about the car sales. And this is where we're at, folks. This is the September numbers. And you look right here. And look, not much of a uptick. In fact, we're lower than what we were in April. We're lower than December 2023. Not much on the rate cut there. So it looks like the rate cut basically fizzled. It fizzled. It's not enough to help people. And we said right here, that small rate cut is not going to be enough to help people. It's not going to get rid of the debt. But of course, you have still in the background the attempt to start erasing debt, starting with student loan forgiveness, right? And this is going to be the beginning of a big wave, I think. I think bankruptcies are going to be hitting here in the next few months. But I think something big is going to surprise a lot of people here in the next couple weeks. I think we're going to see some unrest. I think we're going to see some shocking things unfold. Let me just leave it at that. I've got to be really careful, how I describe this to you. But more signs popping up and emerging that the U.S. consumer is struggling big time. We've got 150 Denny's restaurants to close by 2025. Just one of many examples. Every episode we talk about signs that there is economic destruction amongst the working class, the middle class U.S. consumer. Home sales in the gutter, folks. In the gutter. Take a look here. As of September, there you go. Does that look very good? With the rate cut, right? We've got long-term rates rising. because investors now are so skittish on the de-dollarization, the weakening dollar, and the rate cuts actually are backfiring so far. And look, no rebound in the housing market either. We have to go all the way back to coming out of the housing bubble from 2008, 2009, 2010 when it went bust. Aside from that, though, you have to go all the way back to the mid 90s, folks. We're talking about approaching the lowest in about 30 years, not counting the housing bubble bust, but we're on the way there. And another drop from the month prior, not helping the housing market. How much worse would it have been without the rate cut? Well, mortgage rates actually hit a 4-week high today. So we're not seeing what the money creators, the powers that be, wanted to see. They wanted to bring new life into these markets, the auto sales, home sales, but they have not, even with over 2,000 down payment assistance programs across the U.S. We talked about that, was our last report. We talked about that, right? Over 2,000 down payment assistance programs. Every state's got them, folks. It's crazy. And yet, another sign that the U.S. consumer is up against the wall or approaching the bust point. Bull, boom, bear, bust. Let's say they're approaching the bust point. Starbucks shares fall after warning inflation battered customers are cutting back. What do we tell you here? That's going to be the wants that people are going to start cutting back on. The wants, not the needs, but the wants. Stuff that people want, but they can live without. Unless you're really addicted to coffee, you don't need to go buy a $3, $4, $5 coffee at Starbucks. I guess if you get it all tricked out, if you get your drink tricked out, I think it's even $5 or $6 now for the big fancy ones with the foam and all the sprinkles and stuff like that. But if you just want a basic coffee, you can still get it for about $3, and that's the large one. I don't know what they call it. There's a word they give it. I don't go to Starbucks that often. But folks, this is another sign. Starbucks warning. Let's see here. They had an interview with Jim Cramer, and the shares dropped Wednesday after the company warned its inflation-battered customers are cutting back on its pricey coffee. I'm sure the CEO didn't call it pricey coffee, but that's what the article says. This is out of the Post here. Even as its new CEO begins a turnaround bid, the Seattle-based Java giant released preliminary results for the latest quarter, revealing its same-store sales dropped 7%, its steepest decline in the pandemic. That was the third quarter, folks. So Starbucks, another sign, folks, that people are cutting back. People just didn't stop liking coffee. People still love coffee. More people are making coffee at home. I started making coffee at home years ago using one of those French presses. Still can't get it to taste like they make at the coffee shops, but hey, I'm saving a lot of money and it's probably a lot healthier. More proof that people are struggling here. Como News. Housing affordability troubles. Nearly 60% of young adults are rent burdened. 60% young adults rent burdened. Young adults are supposed to have the easiest time. They don't have kids yet. They don't have families. They don't have many obligations, but they're still loaded up on debt and they're struggling to pay rent even with roommates. All right, I remember being in college, getting a couple roommates. We all split it up evenly, and it's pretty easy. I had money left over, money to go out and waste, and I wasted it. It looks like people are still out wasting money, though, when you look at the way that people are spending, but it's debt-driven spending. It's the credit cards. Credit card companies still have not tightened for the most part. Only 1 in 5 banks are tightening. In other words, you're still going to see a lot of people out shopping, aka running up lots of debt. But they're pulling back in some areas. Look at Starbucks. Look at some of the malls. I went to the mall last week. It was dead, folks. I would have to say about I'd give it 1 in 6 or 1 in 7 stores were closed in the mall that I went to. This was over in El Cajon, which is East County here in San Diego. Looked pretty abysmal in there, that's for sure. Now, what's going on with mortgage rates? Why are they not dropping with the rate cut? Well, investors are very, very concerned. We have a lot of political uncertainty right now, to say the least. Political uncertainty. Again, we have both sides out there saying the other side's going to completely obliterate the economy, and believe who you want to believe. But I'm not sure if either side actually has any real solutions. Sure, there'll be a few things that they'll try to do, right? But you may have, or they may have, a lot of pushback, right? You see this left versus right situation, and it really prevents real progress from happening, in my opinion. And that could all be a show. Maybe they don't even want progress. They want to act like or look like they're really trying to help the people, but things are just going to continue to get worse unless we see some massive, massive scare come about and shakes this market out like a 2008, a Lehman Brothers failure, kicking it off. You know, we already would have had that with the bank failures in 2023, but they came in, borrowed a bunch of money, printed, created money, whatever you want to call it, and bailed out all the depositors and stopped the fear and the contagion in the banking sector. So I think that's likely to happen, but see, that has long-term effects too. That has the effects of inflation, right? When you continually stop deflation and when you try to put a floor under prices, when you try to control the markets, and we're talking about the money creators, instead of allowing markets to fluctuate as they should, like right now with unaffordability near all-time highs, prices should come down. But look at all the things they're doing to keep the bubbles inflated, right? Nobody wants the bubbles to deflate on their watch because they'll get the blame, because people believe that inflation is economic growth. Most of the population believes that. I don't think anyone here in this channel believes it. Maybe a couple of you, but most of you are hip to the game, so to speak. You know the type of shenanigans and foolery and fakery that's put into this economic view here, right? So what do you guys think about this? Long-term rates rising. People are scared. De-dollarization happening. People are concerned about the dollar. So they're demanding more on this debt that they're buying. That's why yields are rising on these treasuries. And it's just going to continue, I think, folks. So let me know if you see anything else other than what I'm seeing. And we're going to keep an eye on this for you. We'll be back on the weekend for more reports. Please make sure you are subscribed. Critical time to stay ahead of the curve. See you down in the comments on this one. Hopefully, everybody. Thanks for being here. Keep stacking. Bye for now. Peace.